We're going to look at the expanded accounting equation and talk about debits and credits. How do I record things correctly? It's also important to understand what the term normal balance means. And a normal balance is just how do I increase an account with a debit or a credit. So starting with the basic accounting equation, assets equal liabilities plus equity. Let's say you have a building that's worth $250,000 when you buy it. It comes with a mortgage of $200,000 and a down payment of $50,000, so that $50,000 is going to represent your equity. The mortgage, the loan, is your liability. So assets equals liabilities plus equity. And what is a liability? Well, you have to pay your creditors first, so that's your creditors' claims on the assets, and which means equity is the owner's claims on the assets. So think about how much equity do you have in your home and how much does the bank own. So what is the expanded accounting equation? Well, we're going to start with the same, with the basic. Liabilities plus equity. And when we expand things, we're looking at expanded equity, or what goes into equity, because there are things that will increase it and there will things that decrease it. Investment will increase it, withdrawals will decrease it. So the owner puts money in, takes money out. It's going to increase and then decrease equity. Revenue, if I earn money, that's going to increase it, but I've got to pay my expenses. Expense is going to decrease equity. So here are your four components. Two of them increase it, two of them decrease it. So putting it together, assets equal liability plus investments minus withdrawals plus revenue minus expenses. This is your expanded accounting equation. It's still assets equal liability plus equity. We're just looking at what goes into equity. So what's a debit and a credit? Well, debit can be abbreviated DR for debitor or creditor. Credit can be abbreviated CR. And what is a normal balance? It means how do I increase an account. So if you learn your normal balances, you will be fine. You need to have a good, strong understanding of your normal balances. How do I increase and decrease accounts? Normal meaning how do I increase it? And why is this important? Because this is going to determine, do I debit my account or do I credit my account? Is it supposed to go up? And how? Do I increase it with a debit or do I increase it with a credit? Well, it's going to depend. It's going to depend on the account. And here's where you need to first memorize this until you really learn it and to really remember it. So looking at your expanded accounting equation, what is the normal balance? For an asset, it's a debit, meaning if an asset goes up, I debit it. If an asset goes down, I credit it. On the other side of the equal sign is going to be the opposite. So think of that equal sign as your mirror. How do I increase a liability with a credit? How do I decrease a liability? It's going to be with a debit. So it's going to be opposite. Now, what about owner's investments? Well, anything on the other side, how do I, in general, increase equity? With a credit, just like a liability. So assets equal liability plus equity. Debits must equal credits. Okay, now what about the expansion? What about all these other things? Well, how does a withdrawal affect equity? It decreases it. That's why my normal balance is a debit, because a debit decreases equity, a credit increases equity. Investments increase equity, withdrawals decrease equity. Same logic for revenues and expenses. In general, on that right side of the equal sign, anything to increase is a credit. How does revenue affect equity? It increases it, so the normal balance is a credit. How does expense affect equity? So equity increases with a credit, but an expense will decrease equity, so the normal balance is a debit. Make sure you write these down. You need to know your normal balance is backwards and forwards, going into further chapters. This is the basic foundation you have to know in accounting. Okay, so here's your expanded accounting equation with the normal balances. Debits equal credits, plus credits, minus debits, plus credits, minus debits. There are many memory tricks you can use, but see if you can come up with one. So now what is a T account? Well, a T account is just a representation of a ledger account. And accountants like to use T accounts just to do the quick math. If you're on the phone with a client and you need a quick answer, draw a T account. Okay, so what is a debit and what is a credit? Does it increase it or decrease it? And again, as we said, it depends on the account. Depends on normal balance. What you need to remember is this is location only. The debit is the left side of the T account. The credit is the right side of the T account. And when we start doing journal entries, this will make sense. Debit or credit, it doesn't mean all the time an increase or all the time a decrease. Remember, it depends on the account, the category. It's location only. The debit's on the left, the credit's on the right. Okay, here's your expanded accounting equation. An asset, normal balance, is a debit. That's how I increase it. A liability, how do I increase it? With a credit. Owner's investment will increase with a credit. Owner's withdrawals will increase with a debit. So what happens to equity when I take money out? Equity goes down, but the total withdrawals, if I keep withdrawing money, the total withdrawal account goes up, even though the net effect on equity is to decrease it, which means the normal balance is a debit. Same logic with revenues and expenses. Revenue increases equity. Equity increases with credit. Expenses decrease equity. That means as expenses go up, the normal balance is a debit because of the net effect on equity. That's really the hard part to remember, but once you get it, you get it. And you need to know, you need to have a strong foundation of debits and credits with everything in accounting. The debit is on the left side with assets, owner's withdrawals, and expenses. AWE, that's your debit side. Assets, withdrawals, and expenses. The credit normal balances, liabilities, owner's investment, and revenue. Credits are on the right side. L, liabilities, I, investment, R, revenue. This is just a memory trick while you're first learning this, but do what works for you. Equity increases with investments, decreases with withdrawals. Revenue increases equity, expenses decrease equity. There are four components. Remember the two that increase equity and what decreases equity, and that's where it goes on your T account. Investments and revenue will increase it. Owner's withdrawals and expenses will decrease it. So, what is a normal balance? How do you increase an account with a debit or a credit? Depends on the account. If it's an asset, the normal balance is a debit. If it's a liability, the normal balance is a credit. It's location only, debits and credits. Debit on the left side, credit on the right side.